Hello and welcome everyone to Financing Philadelphia's Future with Councilmember Derek Green. This is a live question and answer session about creating the Philadelphia Public Bank. Thank you for joining us today. I'm your moderator, Vanessa Lowe. I co-chair the Economic Dignity Team for Power, Philadelphians Organized to Witness, Empower, and Rebuild. I also host a radio show called Vanessa's Money Hour on Germantown Community Radio. Glad you joined us today. Let me go through sort of how this works a little bit. You'll be muted throughout, but we need your questions. So enter those in the chat or the Q&A. I think we're both on Zoom and we're on Facebook. So enter your questions. You can start that now. We want to see what you're asking, and we're going to try to cover as much as we can in the short time we have. Use the speaker view. That's the best way, so that when the person is speaking, they'll be prominent on your screen. So try that. And also our hosts, Dwayne Terry and Peter Winslow, they're going to be capturing your questions. So again, start sending those throughout. And you can refer to the chat for any additional information that our tech host, Tim Brown, will be sending. Please give us your first name and your neighborhood when you ask a question. We want to know what people are asking from and who all's on the line. And also let us know if you have a question for a specific person. Finally, if you'd like to get on the email so that you get the notices about these directly, put your name and your email in the chat, and you will be added to the listserv for the Philadelphia Public Banking Coalition. All right, we only have 30 minutes, so let's go ahead and jump in. Let me introduce Councilman Derek Green. He is serving his second term as City Council member at large. He has a background in banking and a deep commitment to sustainable economic development, particularly for Philly's Black and Brown neighborhoods. He chairs the committees on finance and disabilities. His top legislative priority is the establishment of a Philadelphia Public Bank. And our guest today is James Burnett. He is Executive Director of VestedIn. It used to be called West Philadelphia Financial Services Institution, or WPFSI, and he's been Executive Director since 1999. So VestedIn is a community development financial institution, or a CDFI. You've heard me talk about, we've talked about that on this before. And VestedIn provides loans of up to $100,000 to businesses and entrepreneurs, originally in West Philadelphia, but now they've expanded to 7 counties across Pennsylvania, Jersey, and Delaware. They also offer grants, technical services, and other programs to enhance local business success and strengthen the foundation of the community. Burnett has over 30 years of experience in the financial services industry. Let's go ahead and open it up, and I'll invite Councilmember Green to get us started.
Thank you, Vanessa, for the introduction. I will be very brief for today's intro, because I really want to spend some more time talking with Jim Burnett of VestedIn. There's been a lot of interesting new developments in reference to public banking. And in particular, we're really focusing on how we can make the Philadelphia Public Bank an entity that has the ability to assist community development financial institutions like VestedIn through letters of credit and credit enhancements, so that they can actually borrow more money and do more lending to help the communities in the city of Philadelphia. Also, I know last week there was a hearing held in the House specifically talking about public banking at the national level. Congresswoman Alexandria Ocasio-Cortez was actually talking about public banking, and so we're starting to generate more perspective and more interest in public banking. We've been meeting twice a week, both with Hound and Knight and the law department, really trying to finalize the legislation in order to move forward this fall. And we've been actively preparing for the Public Bank Visioning Summit for Saturday, September 18th. So there's been a lot of activity, even though it's very hot and humid, but it's been hot in reference to the issues of public banking. And I think having Jim Burnett on is very important, because I think CDFIs are one of the real partnership opportunities for a public bank, where we can provide access to credit or credit enhancement that can really enable CDFIs to do more of the great work that they're doing in our city.
Great, thank you for that. And Jim Burnett, welcome. I'm going to go ahead and tell it. Jim Burnett is one of my mentors. I went into West Philadelphia Financial Services many, many years ago. We won't say how many, and said, I'd love to partner because I need to learn how to do, CDFI stuff. And because of the time I spent with Jim Burnett, I am now actually retiring from 21 years in federal service supporting CDFI. Jim Burnett, give us a little intro talk.
Thank you, Vanessa, and thank you, Councilmember Green, for inviting me to participate in this discussion with you. VestedIn is a 23-year-old organization. We started in 1997 and became a CDFI at the time. We were part of what was called the Empowerment Zone that was created through President Clinton at the time. And we actually started in just 2 census tracts in West Philadelphia. And our focus was to lend money to about 200 businesses that were located in that part of West Philadelphia. So it was a really small space. And as opportunities presented themselves, we were asked to do a couple more things to provide funds for housing, rehabs, and then secondly, to develop a shopping center at 52nd and Jefferson Streets. In the development of that shopping center, we were the first CDFI in Philadelphia to use new market tax credits. And that was, we ended up using about $17.5 million in new market tax credits on a $55 million deal. So with our $2 million investment, we were actually able to leverage $55 million. And that's kind of how CDFIs work, right? We bring our assets to the table and we help to raise additional assets to help create and keep communities growing themselves. Since that point in time, we actually ran into a problem with our success in that development. We created over 700 jobs, put in 13 different businesses. Even 12 years later, or we are actually going on 14 years later, we are 100% occupied. We went through last year's civil unrest and our tenants went through that and decided that they were going to stay. And that was a little scary for some national brands who had a history of not necessarily wanting to be located in predominantly African-American communities. So we were very fortunate, one, that we got them to come in the first place in 2007, 2008. But then we ran into a problem. With our success, actually the CDFI Fund came back to us as an organization and said, hey, you're no longer a CDFI, you're a real estate development company. And they took away our certification. And the challenge with that is when you're not certified as a CDFI, it's hard to raise capital from banks who only want to invest in actual CDFIs. So we negotiated with the CDFI Fund for 8 years, finally convinced them when we looked at moving the asset off of our balance sheet into a separate CDC. And the thing that put us over the top was the fact that we were going to have to pay property transfer taxes of over $600,000. And the CDFI Fund said it really wasn't worth us giving away $600,000 to the city and the state. No disrespect, Councilman. But it was better for us to be a CDFI and make those loans to small businesses in the area. And we were giving our certification again in 2016. And for us as a smaller CDFI, it allowed for us to get more support. And since that point in time, we've gotten investments from Wells Fargo. We became a SBA micro lender. We've gotten investment from JP Morgan. And right now we're working with a team of CDFIs, including PIDC, Community First Fund, United Bank, to negotiate additional investments from most of the major banks in the city of Philadelphia. So it's a really exciting time for CDFIs. In the past year, we spent giving out grants through the state of Pennsylvania's CARES dollars, and we delivered over $250 million to the small businesses in Philadelphia. So we think we're in really great position to scale up, especially the smaller institutions like myself, to be able to support in particular those businesses of color. And in Philadelphia in particular, those Black business owners and those residents who represent over 40% of the entire population.
Wow, what great background about CDFIs, but also a lesson for CDFIs. That's very interesting about the real estate. I'm going to just turn it for a second to Dwayne or Peter. Do you have any questions? Let's hear from the audience.
Yes, Vanessa, we have a question from Pamela Haynes. It's a question that is asked fairly frequently. She writes, some people express concern that a public bank would compete with other local financial institutions. Could you talk about how they can complement each other instead?
And Peter, thank you for that question. I see Stessa Cohen from Mount Airy also had a similar question about the need for a public bank when there are over 30 credit unions and community banks that have similar missions and goals. And from my perspective, and talking to a number of different entities over the years, and some of you also know I started my career as a banker with Meridian Bank many years ago before the gray and the lack of hair on the top of my head. But one of the challenges, even for CDFIs like VestedIn and others, being able to lend more dollars. And from my perspective, the way a public bank can really partner with these entities is that they can provide that letter of credit or guarantee so they don't have to tie up their assets to provide collateral to another entity that is actually giving them lending ability, as well as providing that type of collateral or credit enhancement to some of their customers. It allows community banks, credit unions, CDFIs to focus just on lending, whereas a public bank, as we are working on creates that opportunity of providing collateral that those entities can use in order to do more lending and grow. The other issue and concern is the concern about concentration, because you want to make sure that if a CDFI is providing a loan, there's another separate entity that's providing that credit enhancement for that entity. And I think that's going to provide more opportunities and unlock a lot of increased potential for lending for CDFIs, for other credit unions, other institutions in the city of Philadelphia, because what those institutions focus on is lending. And so what we're trying to do with the public bank, coming out of a public sector perspective, have that patient resources in order to enhance the ability for both customers, from customers, I'm talking about small businesses in particular, especially in the Black and Brown communities, for CDFIs themselves, other hard to lend to entities like cooperatives, affordable housing developers, to be able to get access to credit and unlock the credit that some of them are not able to get. From my perspective, this public bank initiative is one aspect to addressing this issue. There are other entities that are coming on board that can also augment the work that our great CDFIs are doing, from the work that Greg Heller is doing with the Philadelphia Accelerator Fund, to the work that Emily Shapira and Mary Rose Martellus are doing with the Philadelphia Green Capital Corporation, which is a green bank. I think collectively, all of us will help to provide additional support and resources to enable more growth in our city.
Great. Dwayne, did you have a question?
I was going to read the one that Derek read, but he
Okay.
read it first.
All right.
I've got another question. Maybe you can explain a little bit what the CDFI Fund does and how that works to support at the national level the work of CDFIs across the country.
Sure. The CDFI Fund is one of the primary funders of all the CDFIs across the country. There is a challenge again for smaller CDFIs in terms of getting the capital that we need. And I'll just use us as an example because I don't want to speak for anyone else. And because we could not attract matching dollars from financial institutions, getting new capital was a challenge. And so where we are now, we were fortunate enough to receive approval for rapid relief financing, which supported us at, I think, about $500,000. And so that $500,000 amount was based on our existing portfolio. So our portfolio right now is about $1 million or so. And that's about all we could get based on that analysis. So each time we go in for an application, whether it's a financial application or a technical assistance application, it's always based on our current portfolio in the past fiscal year. So in that regard, what we need is other institutions that are, one, willing to match those dollars. And then we can, in order for the CDFI fund to match those dollars, and they'll do it in whichever way. So if we were able to get a foundation to say, we're going to give you a grant, that's great. We would be able to go to the CDFI fund and get a grant. If we were able to get a bank to give us a loan, they would give us the terms on the terms of the loan. So it would match it directly. So whether it's a grant or a loan, they would match those terms directly. The challenge is the amounts that we can get. I can't go back to the CDFI funds and say, you know, I need $10 million, not $500,000. I would only be eligible for what my portfolio looked like versus a larger institution, such as a reinvestment fund, who can go after new market tax credits and other resources, can get larger pools of money. And they've done that. And it's been great in helping them expand. What we're looking at as a smaller institution is, how do we scale, right? Especially as a Black-led institution who's had its footprint in this community, and not just kind of the West Philadelphia community, but the Philadelphia community, and being able to deliver resources to businesses who we have to turn away or refer to other institutions. How do we get larger sums of money? Well, part of that is actually getting the equity on our balance sheet or some type of guarantee that's going to allow for those financial institutions to provide more capital, so that we can, we'll still try to match the funds for the CDFI fund, but quite frankly, it's more important to go out to public sources, or in public sources, I mean banks, financial institutions, other financial institutions, and investors, to raise that debt capital, but getting that kind of equity capital through public sources, and those other credit enhancement through public sources too.
And just to follow up, that's exactly where I see the partnership opportunities for a public bank with an entity like Vested in other CDFIs. So they're not having to be in a situation of taking that type of lending from other entities, because we're coming from this perspective, from a public perspective, using public dollars to provide that type of investment in entities like Vested in and others, where we're not looking for the same rate of return as private entities, shows the investment that we as a city are making in CDFIs like Vested in, so they can do much more lending and grow to help and provide larger loans and larger opportunities for other businesses. And as those businesses grow, that's going to help provide those businesses the ability to finance and have more job opportunities, continue to grow, employ more people, and ultimately help to address the poverty issues we have in our city, and grow our commercial corridors and our neighborhoods, and cycle more dollars into our community and throughout our city.
Thanks for that. Peter or Dwayne, why don't you queue up another question, but I just want to throw in a couple of statistics here. I used to work for the CDFI Fund, and so you may have heard of them now because they've gotten a lot more attention. Kenzie Scott, many of the groups that she gave to, that's Jeff Bezos' ex-wife, are CDFIs, because it's now been such a long established industry that supports, the whole purpose is to support underserved communities with access to capital. So it's more well known. There are more than 1,100 institutions throughout the United States, and they distributed $1.25 billion for COVID relief to those CDFIs throughout the country. The press release came out last month. $19 million of that went to about, I think the list has about 13 CDFIs just in the Philadelphia region. So very well-established industry. Jim Burnett is, again, concentrated in West Philadelphia, but now has expanded. So wonderful institutions that are really, the whole purpose is to serve communities that lack access to capital. Do we have a question?
Yes. Jim, does Vested in provide technical assistance, or do you have outsourced technical assistance? And how can the technical assistance aspect of the lending and helping small businesses that are your customers so that they're successful, how does that work and how might that interface with the public bank?
Yeah, so yes, the answer is yes, we do provide technical assistance to our businesses. And as a SBA micro lender, we're required to provide a minimum of an hour a month with our SBA borrowers. And so we do that. Most of our direct support comes in the form of kind of business consulting and strategy. Where we see specific needs, we refer them to other service providers. We have a great relationship with, actually, Philadelphia has one of the best networks of small business support organizations, including SBDC, Temple SBDC, the BRIC at the library, Business Resource Information Center. PIDC has wonderful classes that they provide. The Enterprise Center does a lot of really excellent stuff, Women's Opportunity Resource Center. So there's a whole host of organizations that do a lot of the TA hands-on. We also run a program called Be Smart, which is a 10-week small business development program. I'm not seeing necessarily a place for the public bank in that necessarily. I think their role could be more focused on delivering and making sure that capital is getting to the organizations that need to direct that capital to the small businesses. There is an ecosystem paper that was put out by the United Way, and I'm going to put the link into the chat for that so that people can take a look at it. It was an analysis over the last couple of years by United Way, the Commerce Department, and PIDC. So people can take a look at that. But I think it's important to understand how the ecosystem works and some of the issues and challenges that were identified in that. One, in terms of capital being one, but technical assistance being the other. And not just that it's available, but how do small businesses access it? Do they even know that a Temple SBDC exists? Do they know that a welcoming center exists for an immigrant business owner who may need language skills, or that a Chinatown CDC is available to help that business grow? And all of these entities are out there and working, but we've kind of been siloed off. And so how do we now come together, which happened a lot during COVID? I think COVID really forced us to work together to really get the resources out to small businesses, especially since we wanted them to get the capital that was available so that they could benefit.
And if I could follow up on that point, and I definitely agree with Jim on this ecosystem of CDFIs really coming together in its time of need. One of the things I think the public bank, I would hope, will be able to do is help to really promote all of these CDFIs around the city of Philadelphia, from the VestedIns and the Fanadas, the Enterprise Center, letting people know what they do, because too often many people are not as familiar with all the great work that these CDFIs do. And I think that's something that needs to be promoted more. And the challenge is that with the limited resources that they have, they're focusing on how do we get out the services, both from a lending perspective and products, as well as technical assistance to those organizations, and don't have the resources that they should have to really promote what they do, compared to when you see the private sector. If you see a Stagecoach, you're thinking Wells Fargo. If you're thinking Phillies, and hopefully they'll continue to get better, you're thinking Citizens Bank Park. But for all these great organizations in our city, people don't have the same perspective and knowledge of the work they do, which I think is very important. But I did want to ask one quick question, since I have Jim here. Considering that all of the collaboration that's occurred because of the pandemic, and it's been an increased focus both in the CARES Act and the American Rescue Plan dollars on getting money to CDFIs because of the work that they do at the real grassroots community neighborhood commercial corridor level. What do you think the public sector can do to really help promote CDFIs and provide a better ability for them to be able to do what they need to do to really help businesses that were really decimated through the pandemic, to help them to come out of this challenge in a better way?
Yes, I think the issue is there's probably three things that we can focus on. One, there's an immediate need still for small businesses. Most small businesses have not gotten back to the level of operations and revenue that they did pre-pandemic. And so a lot of these businesses, if we want those businesses, and a lot of people say we want these businesses to survive, there is definitely a need for more grant dollars to go out. We've, gone after the CARES money. We were in the application for the CARES money. We received 65,000 applications for over $1 billion worth of support. We were only able to support with the $250 million, 15,000 of those applications. So that's 50,000 businesses. And these are only businesses under $1 million in revenue. So it's not like the large companies that you hear getting the millions of dollars from PPP. No, these are your neighborhood businesses that you shop in on a regular basis. Those are the ones that really need our support right now. And so we have a request in right now on the Pennsylvania CDFI network for $500 million so that we can go back in with American CARES, American relief dollars to continue to support these small businesses. So that's number one. Secondly is to help the CDFIs scale. Give us the new capital. So if they're not, well, give us being relative, okay? So as somebody who lends money on a regular basis, yeah, I understand the banks lend us money. So we don't have to, we want to make sure that we have the language right. We're looking for investments, right? And those investments come in the form of debt from banks and equity, ideally from the public sector. So if we can get more support from the public sector, it offsets the bank's requirement for us to have a strong balance sheet. So we need to make sure that our leverage is somewhere around ideally 4 to 5 to 1 debt to equity. And that would help us raise the additional capital that we need to support small business owners, small real estate developers who are in our communities that are gentrifying. But what if the people fixing those houses and moving into those houses look like the people from those communities? It's a totally different scenario than when we're hiring them. They're working in the neighborhood. The people who live there see people that look like them working on them, as opposed to other folks who are coming in and from New Jersey and other places. So that's two. And then the technical assistance that we talked about and making that investment to move forward, because the biggest problem we had with the small businesses applying for our grants, PPP loans, was documentation. And it wasn't necessarily just to get the documentation, which was a big problem for some because they either didn't have accountants, they had poor accountants or poor tax preparers. They were recommended to prepare their taxes to losses as opposed to showing their profits. But most importantly was technology. A lot of these business owners didn't have a computer. They had a phone. So they had a phone that they could use, but they didn't have a computer. They didn't have copy machines that would allow them to copy their tax returns and submit them. And the only thing that they could do was take a picture on their phone, which a lot of the applications didn't allow them to submit these documents into. So until they were able to kind of get the resources then, and now we're losing money. So now I'm in a situation where I'm losing money, I have no more money to spend. This is why we still need the capital right now in forms of grants before we get to the loan capital. But for the CDFIs, we need to be reinforced right now because the need is definitely going to be there within the next year to support these small businesses. But for us, how we grow is by making loans. And we need to, one, the capital and the infrastructure to be able to do so.
Jim, I'm going to jump in here because we're actually overtime. It's so fast. It's 5:01. Thank everyone so much for this. I do want to mention next month, our guest will be Shaman Walton. He's president of the San Francisco Board of Supervisors. They're on a similar path to us of trying to establish a public bank for their city. Let me turn it to Councilmember Green to do a quick closing.
Well, thank you, Jim, for being here, providing that great information regarding CDFIs, all the great work you're doing, and the leadership that you've taken upon yourself to really coordinate and organize CDFIs, not only in Philadelphia, but around the Commonwealth. I think it's been a model for a number of other jurisdictions around the nation. This as a close, Shaman Walton is the chair of the Board of Supervisors for the city of San Francisco. They're on a different time schedule, so we'll probably have to record our conversation with Supervisor Walton and then broadcast that during the time period that we would normally have Philadelphia Public Banking Coalition live. So we won't be able to have the same type of interaction, but it'll be interesting to hear his perspective as they are moving through public banking initiative in the West Coast as we are doing it on the East Coast. But thank you, Vanessa, for being a great moderator. Jim, thank you for your participation, all the great work that you are doing to really help finance Philadelphia's future.
See you next month, folks.
Thank you.
Thank you. Take care.